David, it appears on Friday that the rand finally succumbed to that weakness that we were seeing in the euro against the dollar, trading up about 7.85 at one stage, back around 7.73, 7.74 at the moment. But some dealers saying that we could now test that 8 rand mark. What's your view?
Hi, Stephen. I think that move on late Friday afternoon to 7.85 was precipitated by a quick sudden fall in the Dow, which really created some risk aversion, and obviously the dollar was strengthening at the same time, and the rand ran through some stop losses. What that's done now is created the scenario where we've broken through some key technical levels, and it's certainly potentially on the cards that we can move up to 8, even beyond 8. But what we need to do to achieve that is to see some further dollar strength, or perhaps some further risk aversion.
Is that the picture though at the moment? Because we have seen risk aversion over the past week growing in the markets. The focus really moved from Greece now on to Spain and Portugal and their fiscal problems. Do you think that we're going to continue to see the euro weakening against the dollar and potentially the rand as well?
I think that's very, very potentially on the card, Stephen. We've seen a slight retracement in the euro this morning, as traders have tried to make some sense of the statements coming out of Europe that they will assist Greece. But you know, the whole debate around Europe at the moment is gaining some momentum, and as you say, spreading to other countries within the European mechanism. And it's really the debate is about how do you enforce some fiscal discipline, yet still have sovereign decision-making powers within each nation, and that's going to cause some problems for the euro going forward. And it wouldn't surprise me at all if the dollar continues on a strengthening way.
Well, just taking a look at the jobs data that came out of the US on Friday, which probably triggered that slide on the Dow. We saw unemployment dropping unexpectedly to 9.7%, but the US economy still shedding more jobs than expected. So really a mixed picture on that front.
Yeah, I think the unemployment rate dropped to 9.7 was a bit of a technical feature, the way they measure the absolute number, and a lot of the people that have been looking for jobs and simply can't find jobs now have fallen out of the survey, and hence we've seen that drop down to 9.7. I think we'll see that resuming its downward trend, or in fact its weaker trend over the next couple of months, and peak at somewhere around 10.4, 10.5%. The jobs number is not great, simply from a point of view that we've seen some very good economic data growth data coming out of the US, but it's a jobless recovery. It remains a jobless recovery, and that will just continue to dent consumer sentiment, and that's a real problem at the moment, because you know, the US economy requires some spending to get it going again. So it will continue to be a problem.
Of course, we have Eurozone growth figures coming out on Friday. How important are they going to be in the greater scheme of things when dictating the dollar-euro movement going forward?
Well, I think in the macro view, very important just to get a sense of whether this so-called recovery is feeding through and continuing into other parts of the world, simply from a point of view that you know, we're coming up to where the authorities have to decide whether they're going to withdraw some of their quantitative easing. And we've seen the UK make some noises about that, whether some of the stimulus packages are going to be removed out of the system. And the authorities will only do that if they've got some confidence that the global economy is on the path to recovery. So in the grand scheme of things, very important, and obviously for the euro as a whole, important as well.
Of course, we have some economic data coming out locally as well. We have the manufacturing data due on Thursday. PMI, of course, has been above 50 for 3 months in a row now, so showing expansion. Do you think we're finally going to see some expansion coming through in the manufacturing numbers themselves?
I think we're so linked to the rest of the world at the moment, Stephen, that it would surprise me if we don't see some growth numbers or continuation of the growth numbers. But again, here, you know, the problem with that is it needs to feed through into job creation, and I think that's going to be the focus in the weeks and months ahead. How does this economic growth, and arguably what the numbers that we're seeing is really on inventory replenishment, how do we get this economy, this economic growth to feed through into jobs growth, which will of course create a lot more confidence in the system.
David, jobs growth, do you think that's going to be one of the focuses of the State of the Nation address from President Zuma on Thursday?
Absolutely, there's no doubt in my mind, Stephen. You know, President Zuma did say last year he wanted to create 500,000 jobs. That was, you know, fairy tale given the state of the global economy. I certainly think it will be a huge part of the agenda for the government going forward, given Casado's stance on the matter, and I think it will receive a lot of attention. The problem is, how do you do it? How do you stimulate your manufacturing? You know, we've heard the debate around a weaker rand, recession, and that's very directly got to do with job growth. So the how-to is going to be the important part.
Of course, just for the rand, we had been talking previously on how strong it had been, how resilient it had been to the strength of the dollar. Do you think now we are going to be following that dollar-euro more closely?
Well, I certainly think, risk aversion has crept back into the market. Some time ago, I was saying to you how surprised I am at the resilience of the rand, and that was really about all the stimulus in the system feeding through into high-yielding currencies. Right now, however, we've had the euro collapse. We've certainly had the stock markets correct somewhat, and it's created some risk aversion, and we've now broken through some key technical levels. So anybody that is long of high-yielding currencies at this point will be questioning the sort of the nature of their positions, and will be a little bit concerned that we can have a quick move back up to 8.10, and they'll be questioning whether to remain long of those high yielders.